Hi, and welcome to this week's look at the major news stories affecting the market so far, and change it up a little bit this week based on events that have happened. So we're going to start by taking a look at the market reaction to the Fed rate decision. We're going to follow up with a slightly more in-depth look at what's been happening with US dollar against the Japanese yen. And then for the final two videos, we're going to look at the contrasting fortunes of two of the world's biggest hitters, and certainly tech big hitters, after their earnings reports. And that's firstly Microsoft, and then we'll take a look at Meta. So how did the market respond to the Fed decision? Well, as we know now, the Fed left the rate unchanged, although there was a little bit of a hint at a possible rate cut in September. Now, late July and August are packed with significant microeconomic events. As we've mentioned, we've already had the Fed decision this week, and we've also had an interest rate decision from the Bank of Japan. On Thursday, we've got the Bank of England meeting and their rate decision, and we've also got US labour market reports across Thursday and Friday. So as I said, we know the Fed left the rate unchanged, but there were hints in the speeches about cuts in September. But the focus now seems to be on the data that's yet to come out, and more clues that will come out with regards to the Fed's future policy. So what happened? Well, stock markets themselves did pretty well off the back of the Fed rate decision. But let's drill down and look at a couple of the currencies. And we're going to start with cable, which is the Great British Pound against the US dollar. Now that remains firmly above the significant support level at 1.2820 ahead of that Bank of England meeting. It has tested the range of 1.2820 down to 1.2800 three times in recent sessions, but so far without breaking through it. Technical analysis of the pair indicates the potential for further growth towards the June highs if it holds above 1.2900. Now, a break below 1.2800 could lead to a correction towards a crucial range of 1.27 down to 1.26. As I say, key events coming up: Bank of England interest rate decision Thursday, US initial jobless claims and US manufacturing PMI for July all on Thursday, and labour market reports Friday. We will just briefly mention, before drilling down a bit more, dollar against the yen, because I've mentioned the Bank of Japan had an interest rate decision this week, and they surprised the market by increasing their interest rate to 0.25%. Now, they broke through several support levels and were trading below 150, but as I say, we'll come on to that more in a moment. But moving forwards, again, US employment reports could well be key, so don't forget your risk management techniques. Okay, second up, we're going to delve a little bit deeper into the dollar-yen situation and the fact that it has broken through and trading below the 150.00 yen to the dollar mark. The yen was last this strong in mid-March, and the central bank news has, without a shadow of a doubt, been the main driver. On Wednesday, the Bank of Japan raised its interest rates to levels that have not been seen in the past 15 years, up to 0.25%. Conversely, the Fed kept its rates unchanged as expected, but certainly opened the door for a possible cut in September. Now, the news weakened the US dollar and provided a bullish boost to US stock markets, and the shift in interest rate policy highlights the collapse of the infamous carry trade strategy that's been in place from early 2023. In fact, from early 23 to the July peak in 2024, the price increased approximately 23%, but started declining amid news of Bank of Japan intervention. On July the 25th, we said the chart clearly showed the construction of a descending channel in red, and said it may be possible that a technical rebound from the lower boundary could well take place. Now, since then, it climbed to the psychological level of 155 yen per dollar on July the 30th. But obviously we know the interest rate decision changed that. If we take a look at the chart today, that shows us that a structure of swing extremes, A to B to C to D to E to F to G, has formed. Notably, each one's subsequent recovery is about 50% of the previous downward impulse, indicating dominant supply forces. The expanding channel that you can see in purples backs that up, adds a bit of weight to that argument. The psychological level of 150 yen to the dollar may act as support moving forwards, mirroring resistance around that 155 yen to the dollar mark. The price action early on Thursday shows signs of demand below 150 yen to the dollar. Thus, it's possible after a fall of circa 8% from peak A, the bears may well be starting to take some profits. And a corrective move H to I towards the upper boundary, the purple channel, could well form. But so we've got some big data coming out, so keep your eyes and your ears open. Okay, now we know it's earnings season in the US. We spoke last week and the week before with regards to banks kicking the season off, but we've had a couple of big players in the tech sphere report the last couple of days with some quite contrasting fortunes. We're going to start with Microsoft, and their share price plummeted after the report, but it's not all that bad. So the report, Q2 earnings report, came out Tuesday after the main session. Earnings per share came in actual at $2.95 per share. That was against an expectation of $2.93. It's above expectation. Gross revenue came in at $64.72 billion against an expectation of $64.38 billion. So again, above expectation. But despite exceeding expectations, the price fell below the psychological threshold of $400 per share in after hours trading. So why did that happen? Sounded like pretty good figures. Well, investors may well have been disappointed by the slowdown in the growth of the cloud business and a significant financial investment in AI infrastructure. And the issue with that is it's a long-term investment with a very delayed payback. So that could have been cause for concern. Could that decline continue? Well, pre-market on Wednesday, the price recovered to about $400 per share, and pre-market Thursday, it's around the $420 per share mark. So it suggests that the initial reactions may have been overly pessimistic. Also, we have to consider the fact there may have been a cascade of stop-loss liquidations below the $405 mark, because that was viewed as a pretty safe level when the price was significantly higher. If we take a look at the chart, well, that shows us the price action in 2024 has formed an ascending channel, which you can see in blue. If the RSI considered extended hours data, it might well indicate that it's in a deeply oversold zone currently. Now, if a sharp decline is followed by a strong recovery, that signifies potential liquidation of speculators. That's quite likely, if you think about it, after a 24% rise this year in the share price. The price could then return to the blue channel, if it does recover well, and resume its growth within it. Wall Street analysts certainly seem to remain positive. TipRanks, who have done a survey of a number of Wall Street analysts, has an average Microsoft forecast at around the $509.42 per share price within 12 months. That, in fact, would be above the record high, and all 26 analysts surveyed had Microsoft as a buy recommendation. So reasonable headline figures. Looking a little bit deeper, some concerns, but it does look as though it may have been overly pessimistic. But watch this space. Okay, so Microsoft figures came out, didn't look terrible, but once we drilled down, a little bit of concern there. Contrast, though, for Meta, and the Meta shares rose above $500 per share off the back of their Q2 earnings report. That came out Wednesday after market and gave us the following figures. Earnings per share came in at $5.16 against an expectation of $4.72 per share. Revenue came in at $39.07 billion against an expectation of $38.26 billion. Daily active users, which obviously is quite important for this company, was up 7% to 3.3 billion people active on a daily basis. Ad impressions grew by 10%, and on top of that, ad prices were up by an average of 10%. So pretty much exceeding all expectations. Mark Zuckerberg stated that the implementation of AI across all the platforms, now obviously there we're talking sort of WhatsApp and Insta as well, is driving engagement growth. Investors certainly didn't seem that bothered that Reality Labs, that's the department that works on the metaverse development, reported a loss of approximately $4.5 billion for Q2, taking its total loss to $50 billion since its inception back in 2020. Not reason for concern, apparently. In fact, in after hours trading on Wednesday evening, the shares are up 7%, passing that psychological level of $500 per share. So what next? Well, on July the 19th, we said that there was an ascending channel in blue formed with support at $455 per share. Now, since then, it's tried to break that support of $455, but rose sharply off the back of it. Thursday pre-market, we're looking at the shares at around $505 per share, so holding above that psychological level of 500. The chart shows that the price is constantly returning within the channel boundaries that we can see. It's a pretty good suggestion that the strong fundamental data has overcome or is overcoming the bullish signs from the bearish signals from the July high that we can see on that chart. And it's quite likely that a broad bullish gap is likely to form on the market open, and that may become a key support level. Now again, if we look at the tip rank survey, as we did with Microsoft, the target average price within the next 12 months is $549 per share. So despite quite a hefty loss in one department for Meta, clearly a very, very well received and a significantly above expectation earnings report. We wish you luck with your trading in the week ahead. Bye for now.